Hi folks, Rick Waddell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham, and today is Thursday, April 9th, and I thought I would come to you with a brief market update and kind of let you know what the market is doing. We're doing this at my home, so if you have any criticisms on the backdrop, please keep them to yourself. In any event, the market is up about 13% this week, which is a very impressive rally. And we'll talk a little bit about what's driving that, along with some economic data that came out this morning. As we talk right now, the market's up about 2% today to about 2,800 on the S&P 500. So a very impressive rally over the course of the last 4 days. And that's been driven largely by improvements in the overall virus data that we've been seeing. So it does appear like new cases in the city of New York have actually peaked. That's the nation's largest virus hotspot. And if, depending on what model you want to use, it looks like their actual death rate may peak either later this week or early next week, with submission of overall transmission rates and just basically the end of the outbreak within sight within the next few weeks. As you'll recall, this virus tends to play out over the course of 6 to 14 days. And so once you start to see peak caseloads and caseloads decline, that normally means that you reach the end of transmission within a few weeks after that, which is great news. It's certainly not something that I think the country suggested, the date that the country expected, pardon me. There certainly has been, over the course of the past 4 or 5 days, a dramatic decline in the overall expected impact of the virus on the United States. We went from expecting about 100,000 deaths with a maximum of perhaps 200,000 down to expecting more like 60,000 deaths to a maximum of about 120 or 130,000. All those numbers are from the University of Washington. That's obviously tremendous news. It doesn't change the magnitude of the impact. It doesn't make it sad. It doesn't make it less sad that there are 60,000 people that will likely pass away from this, but obviously 60,000 is a heck of a lot better than 100,000. So dramatically improved news on the virus front, which is driving equity valuations higher, as well as continued stimulus from the federal government. Which really just speaks to the forward-looking nature of the market, right? I mean, we aren't even to peak death rates yet. And the economic data that we're getting certainly continues to be negative. We had 6.6 million people file for unemployment this week. That was down slightly from the prior week, but not down as much as we were looking for. So obviously the virus continues to take an economic toll on the country. Roughly 30% of the population didn't pay their rent, or 30% of renters didn't pay their rent in April. That's obviously a bad thing. Although I would note that that's a little bit inflated because on a normal basis, it's normally about 15 to 20% of the population that doesn't pay their rent on time. So it's a step up. And, there's any number of bad economic data out there that, just will continue to get worse until the shutdown starts to lift. However, the market, as a forward-looking machine, is looking through that and basically saying that this virus is not quite as bad as we thought it was going to be, and we may be able to begin the process of restarting the economy a little sooner than we thought we were. So that's basically what's driving the market right now. I think it continues to speak to why it is an exceedingly difficult time to try and time the market. Something that if you've watched one of these videos before, you know that we don't encourage. Please stay the course. So with that, I'd just like to wish everyone a wonderful holiday weekend. To our Jewish friends, happy Passover. To our Christian friends, happy Easter. And as always, if you have any questions at all, please feel free to reach out directly to me or to your advisor. And I look forward to speaking to you again soon.